The S&P 500 finished lower by 0.63% today on the back of a number of different corporate news items. First of all, Johnson & Johnson and Eli Lilly both disappointed with the progress that they're seeing with their COVID-19 vaccines. We also saw Apple come out with their new lineup of iPhones, and that stock sold off after the announcement. We also had JP Morgan and other financials coming out with their earnings announcements. And then, of course, it's Amazon Prime Day as well. So a lot of different things going on there. We'll take a look at what it means for the markets and our posture, where we did see 3 out of the 4 equity indices end with a bullish intermediate confirmation signal. Then we'll get into our trade application, where I wanted to focus on one of those COVID plays that is really starting to break out here once again. So with that, let's go ahead and get started. Welcome to the Market Outlook video presented by MarketScholars.com. I'm your host, Brandon Van Zee. It's October 13th, 2020. First of all, if you're new, remember to go over to YouTube, click subscribe on our channel, then go over to our description area where you can sign up for our email distribution list, so that way you can be notified whenever these videos get posted. You'll also be updated as to what stocks in the S&P 500 are giving you overbought and oversold cluster signals. We're also heavy users of Twitter. If you're not doing so already, I would encourage you to follow me. My handle is @BrandonVanZ. We do appreciate those of you that click like and retweet on these Market Outlook related tweets. And then last but not least, we do have a presence on Facebook as well. Feel free to join our group at the web address you see embedded in the logo in front of you. All right, let's jump into the action here today. And as you can see, I've got chart 4B pulled up here in front of us, which will give us a nice high-level overview of the 4 major U.S. equity indices. And as mentioned in the intro, you can see that the S&P 500 was down 0.63% today. The Dow Jones was down 0.55% today. The NASDAQ was just barely down, only 0.1% today. And then the Russell 2000 was the worst performer, down 0.74% today. So not a terrible day, not a great day at the same time. You know, some folks might be growing a little bit concerned with, as you look at the S&P 500, with this red candle that shows up here today, was a little bit lower than that prior high. So at this point, we still haven't taken out that high from September 2nd. And the same thing can be said over here on the Dow Jones, as we're a little bit lower than that prior high over there. Same thing can be said for the NASDAQ Composite, still a bit lower than that high. The Russell 2000 is the one exception to that, where yesterday we did hit a new multi-month high. But remember, the Russell 2000 is a little different than the rest because it's the only one that didn't hit an all-time high, right? The other indices had been hitting all-time highs this year. Russell 2000 had kind of lagged in previous years. So it's great to see the strength in the multi-month view, but it's still got a little bit of work to do to the upside. Now, as I mentioned in the intro, we do have a specific trade setup according to how you read the market forecast technical indicator with 3 out of our 4 charts here today. For those of you that are newer to the video, the market forecast is a technical indicator that you can find on the Thinkorswim platform. And the technical indicator is giving us a trade signal as of this moment in time, known as the bullish intermediate confirmation signal. And there's 2 different parts to that particular trade signal. The first part requires that the green line is bullish. Now, there's a couple of different ways it can be bullish. The green line can either be in the upper reversal zone, so this little pink area above the market forecast. Anything above 80, in other words, would be considered bullish, regardless of whether the line is going up or down or sideways. As long as it's above 80, it's strongly bullish. The other way that you can earn a bullish posture is if the green line is traveling up between 20 and 80, and that's where we stand right now with the S&P 500. Notice its line is at 70 and rising at this moment in time, so we would consider that to be a strongly bullish posture. Remember, you can also use our color visual on the chart itself to help define that. Now that we have this darker green background color, it's a reminder that this green line down below is considered strongly bullish. So that's the first piece of the puzzle, trying to determine, is the green line bullish? And the answer for the S&P 500 and for all 4 of our charts here on that question is yes. And so the second question we ask is, where is the red line? Is the red line in the lower reversal zone? And for 3 out of our 4 charts, that is the case. Notice the red line is below 20 here in the lower reversal zone on the S&P 500. It's at 10 right now, to be precise. It's also at 10 on the Dow Jones Industrial Average, and it's at 14 on the Russell 2000. So since those 3 red numbers are below 20 on the same day when the green intermediate posture is bullish, that defines a bullish intermediate confirmation signal. But as you've probably noticed as you've been listening to these videos over time, there are less ideal forms of the bullish intermediate confirmation signal and more ideal forms of it. And right now we have one of those less ideal forms. The reason for that is the blue line is not between 50 and 20. Now technically the blue line isn't actually part of that signal. It is kind of used as an additional qualifier, something to kind of think about whether you want to be more aggressive with the trade or not, perhaps. And what we've found in the past is if the blue line is between 50 and 20, there's been a decent enough exhale out of the market where it could make sense to take action on that chart. Remember, the bullish intermediate confirmation signal is effectively a buy the dips signal. It's basically saying, okay, the intermediate posture is strong, and the red line is telling you we have a momentary pullback in price. And so we got pullbacks in price here today. The question is, how much of a pullback do you require before you try to take advantage of that? And that's what the blue lines are kind of telling us right now, is that yes, it's true, we did sell off today, but it just wasn't a really aggressive sell-off. So for some folks, they might want to wait an additional day or two to see if the blue line can find its way below 50. And if that happens, then perhaps that would be a more ideal form of that particular trade setup. But the point being, we do continue to have strongly bullish intermediate postures on all 4 of our charts, and 3 out of our 4 charts do have the bullish intermediate confirmation signal. The other thing that I would point out before I leave this chart view is just mentioning that the NASDAQ down only 0.1% today is pretty impressive, considering Apple is the most influential member of the NASDAQ composite, and it was down fairly significantly today after its iPhone announcement. So the fact that all the other NASDAQ composite stocks could make up for Apple's decline is rather impressive. And there were a ton of work from home stocks that were really ripping higher here today. I could rattle off a few of them for you because we own many of them in my Monday top-down trend trading class. Stocks like Chewy. It's a really nice move right out of the gate for the last 3 or 4 days on Chewy there. That's the pet foods company that does a lot of business with e-commerce and delivering pet food to your doorstep. So that's kind of been known as a little bit of a coronavirus play this year. Another stock that's done pretty well is Zoom. And Zoom really zoomed higher today, up over 5%. And while it didn't hit an all-time high, it did have an all-time closing high here today. So a really nice day out of Zoom. Don't forget Teladoc. Teladoc has kind of gone sideways for the last couple of months, unlike Zoom, because Teladoc is busy digesting Livongo. But today it kind of woke up from its slumber, and Teladoc was up 6% today. And we've got Peloton. Peloton was up an additional 3% here today. This stock has basically been going up in a straight line. It's a stock that we haven't owned all that long in my Monday class, but we're already up somewhere between 30 and 40% on it just because it's so relentless to the upside. Other stocks that caught my eye were stocks like Walmart, doing a lot of e-commerce business as well, rocketing to the upside there. CrowdStrike, another one of those work from home stocks, in this case internet security and things like that. It was up 5% today. Adobe, a nice subscription model, cloud-based company. It kind of had a nice little breakout here. So the point being, a lot of those really exciting types of companies, your Fastleys of the world and your Squares of the world, they had a really nice day here today. And Okta, I think, is another one that has been doing pretty well. So a lot of these companies that in the month of September took a little bit of a rest when it almost seemed like, hey, we're going to get back to normal life sooner rather than later. So now we can kind of sell those COVID-19 plays and kind of go into the reopening of the economy plays. That has now reverted back to the way it was earlier in the summer, which is now we're seeing those COVID-19 plays working once again. And part of the reason may be what we learned today from Johnson & Johnson and Eli Lilly, where those were a couple of the vaccine causes that were most expected to be successful, and now that they're hitting roadblocks, it's starting to remind investors that, hey, we got a ways to go here, and if we're looking for leadership within the market, it might be some of those COVID-19 types of plays. So we'll talk about one more of those when we get into our trade application example a little bit later in the video. But before then, let's go ahead and pop on over here to chart 4D now to look at the 3 green arrow status. And on all 4 of our charts, we do have 3 green arrows at this moment in time as well. And that's nothing new. Remember, that had already been the case last week. So all of our charts have that green background color, just to confirm that we still have reasonably strong trend trading environment. In fact, 2020 has been epic in terms of trend trading. I can't hardly believe my eyes when we look at our Monday top-down trend trading class, because it just continues to hit new all-time highs pretty much every week, it feels like. So and that it includes today yet another all-time high. So if you've been a trend trader this year, you have had a smile on your face. If you've been doing other strategies, your smile is probably not quite as bright. But nonetheless, for those of you that have been kind of piling into those COVID plays, it has been an unbelievable year, one of the best ever. Let's go ahead and take a look here now at our next chart setup. And this one will be our 1040 crossover method. And you can see here that we've got some pretty positive activity in terms of our 1040 crossover method. A couple sessions ago, or maybe a couple weeks ago, I was saying how we were getting somewhat close to a bearish crossover on the Russell 2000, as this orange line, which represents a 10-week moving average, came down fairly close to the blue line, which is the 40-week moving average. But the last 2 weeks, remember these are weekly candles on this particular chart setup, they've really kind of bailed out the small caps, and we've actually seen some pretty aggressive movements within the small cap universe, and we'll have that conversation tomorrow morning in my factor-based swing trading class as well, where small size stocks are one of the factors that has really been leading the market in the last month or so. So that kind of has benefited the Russell 2000 here. The other 3 charts, nothing much to report there other than they continue to be bullish from a long-term perspective, which has been the case for the better part of 2020, ever since we got past the coronavirus scare. All right, let me pop on over here to the internet real quick, see how we did with our market Outlook Twitter promotion, and you guys did a fantastic job for me the last time around when I did the video on Thursday. 124 of you clicked like, and it's always my goal to get up into the triple digits, up and over 100, so appreciate those 100 people that did that and the additional 24 to tack it on for good measure. Remember, if you get value out of these free YouTube videos that David and I provide to you, the way you can thank us is clicking like there for us on Twitter. So if you want me to continue to do the full-length versions of the video, click like. As long as we're over 100, I'll be more than happy to do that. Also, while we're over here on the web, let's take a look at our sector selector rankings. This was put out over the weekend, and so it's a couple days old by now, but there was one significant change I wanted to point out to you, and that is technology. Technology is back in our top 3 rankings for the first time since going all the way back here to July. So we've actually seen quite the acceleration there in technology stocks, and that will play into my trade application example a little bit later on into our video tonight as well. So after taking a little bit of rest in the month of September, technology is back and roaring higher once again. So materials, technology, discretionary, kind of our leading areas at this moment. Once again, energy is the worst performer. No surprise there. All right, back on track now with some Thinkorswim charts. Let's pop on over here and do some 12 grid analysis, starting with chart 5A. And as we look at this is our asset class 12 grid. And remember that the background colors of these charts will tell us whether the current intermediate posture using the market forecast is either bullish or bearish. If the charts are pink, like these two are in the lower left-hand corner, that means a bearish posture. If the charts are green, like they are on all the rest, that's a bullish posture. Now, if you see the darker green, like we see here, as opposed to the lighter green down here, the darker green means strongly bullish. The lighter green means weakly bullish. And the same thing can be said with the pinks. Dark pink is strongly bearish, and the light pink is weakly bearish. So in terms of any major movers here on this first graph, I would point out that oil was up over 1% today, and oil has been kind of in a precarious position here. If we're using USO as our proxy, oil was closing below its falling moving average yesterday, but with today's move higher, you actually saw it close above its falling moving average once again. You did see that gold closed lower by 1.57% here today. Now remember, I've been talking a lot about gold here in the last several sessions that I've been doing for you guys, and my assumption is that gold is going to continue to struggle until it doesn't, right? In other words, right now, the path of least resistance for gold is to the downside. You can see the moving average tip is red once again today, telling us that we have price below a falling moving average, and that suits us just fine as we have a bear call spread going on one of the major gold mining companies out there from a prior video. So we'll continue to let that work and see if there can continue to be some pressure there in the gold space. The US dollar had bounced very nicely here today. We're back above a rising moving average, but the posture remains weakly bearish at this moment in time. So I'll be very curious to see how this shakes out. I was assuming that the US dollar would find stability at that rising 30-day moving average. So I was a little bit surprised to see that on Friday and Monday we closed well below that, kind of throwing that assumption into jeopardy. But today we kicked it right back into gear, and now we're back above that moving average again. So not the cleanest of bounces that you'd like to see there, but a bounce nonetheless. Let's continue to watch that because, of course, the US dollar can impact other things out there like commodities, like your gold and your oil, and also foreign investments. So anyway, with the dollar stronger today, you might not be surprised to see that EFA was weaker. This is the foreign stocks in the developed world. They were down over 1% today, underperforming even the S&P 500 there. We had a big day in interest rates. So notice the big drop in 10-year U.S. Treasury yield. We ended the day at 0.72% for the 10-year, which of course means that the long bond itself rose in price. It was up about 0.72%. Right now, again, kind of making the assumption that this will find some resistance, and as far as TLT, will find some resistance as it approaches that downward trending moving average. And the opposite is true when it comes to interest rates themselves, that they will find a little bit of a support bounce on that rising moving average. But we will alert you either way as time goes on as to whether that holds true or not. Let's go ahead and take a look at another set of 12 grids now. In this case, we're going to go over here to the U.S. sectors 12 grid. So as we pull this up here, you're going to find that we had maybe it was 3 or 4 of these sector ETFs that were down over 1% today. The financials were one of those. So notice the financials were down 1.9% today. And as I mentioned in the intro, you had stocks like JP Morgan and others that were pressuring XLF because a lot of the banks are coming out with their earnings reports right now. So there's going to be a little bit more activity there. And so far, it has not been met with kindness, as those financial stocks have largely sold off as of today. But remember, they're not done. All week long, we've got a whole bunch of financial stocks coming out, like Goldman Sachs will come out with their earnings reports and things like that as well. I did notice that BlackRock did quite well, or at least they were this morning. Some of you saw me tweeting about them. So that's been one large cap financial company, BLK is the ticker symbol, that's done pretty well, hit all-time highs here today, and is a good dividend raising company as well, I might add, as it's been a company that we've purchased multiple times over the years in my dividend growth investing classes. Speaking of dividend growth investing class, I did teach that class here today. We covered the consumer staples area, covering two stocks that we've hardly ever talked about before. So if you're curious as to which two consumer staples we reviewed in a head-to-head matchup and which one we ultimately put in our portfolio, that recording should be available a little bit later on tonight. WebEx has not sent me the file back yet, and as soon as they do, I'll get that posted to our calendar. Anyway, in addition to financials being down over 1%, we also saw industrials down over 1%. Industrials had been a leading area of the market. In fact, one of the leading industrials companies was Cummins, and I just had got done posting on Twitter here just a second ago that Cummins announced their 15th straight year of dividend increases after the bell here tonight. So I'm not sure if that will help the stock or not, but it's already been in a nice uptrend prior to that. But today, those cyclical areas were a little bit out of favor as industrials were down over 1%. Energy was also down over 1%. That one is less surprising, right? Because energy stocks have been down consistently for a long time. In fact, as you look at these different charts here on the board in front of us, energy is the only one that has a red moving average. In other words, price below a falling moving average. It was down another 1.5% here today. And then last but not least, real estate was also down over 1%. It was down 1.7% here today. It is trying to stabilize above its rising moving average in this case. In terms of today's winners, we had communications as a winner, just barely. Now remember, today with the Apple iPhone announcement, you did have a stock like T-Mobile benefit here today, as the hopes are that some new subscribers will sign up because of the new 5G enabled iPhone. So that may have helped a few of those areas along there. But communications hasn't necessarily been lighting the world on fire up until here the last couple of days. It actually was spending quite a bit of time below its moving average, which made it a little bit different than some of these other areas like your industrials. Yes, it was below the moving average for a spell there as well, but just not nearly as long as communications was. So I'll be very curious to see if communications can continue to rise or if it ultimately tops out somewhere in this general vicinity where it topped out the last time around. Remember, if you look at the path of least resistance through the lens of the 30-day moving average, it is lower on communications right now, whereas you look at industrials, it's still higher down below here, just like it is on discretionary and materials as well. So, that is going to be something that we need to watch closely, because there are a lot of very important communications companies out there. Disney was, of course, up nicely today on some restructuring announcements, but other popular communication stocks like Facebook and some of the other social media companies have been a little bit under pressure here recently. So anyway, that's your rundown. It's obviously green across the board here on all of our sector charts, but in the case of communications and energy, it's a light green color telling us that we have a weakly bullish posture. The others have a strongly bullish posture. Let's go ahead and take a look at what's going on from a global perspective here today. Coming on over to the global stocks primary 12 grid. For those of you following along at home, that's chart 5E. And here we largely have good news as well. Again, notice all of the green charts, no pink charts. But as always, there are some charts that look better than others. And I would say that the charts that look like they have the strongest trends to me are Japan and India. Both of those right here, kind of in the middle of the screen, have very strong charts. I would also throw South Korea in there as well, and that's your chart in the lower right-hand corner. So the other charts have a bullish posture, but their trends are not all that enticing. For instance, Brazil does not look all that appetizing here, as it's kind of bouncing up on the underside of its downtrending moving average. You could make the same claim for Russia over here as well. So those areas probably not getting as much interest from trend traders. But if you're looking outside of the United States and looking for opportunities, maybe Japan, India, and South Korea could get you done. All right, let's go ahead and get into our trade application example now. And a reminder that those of you that are premium members of Market Scholars would have received this information already earlier today, as I've now been in the habit in the last month or two of placing the trade during the trading session, sending out the trade information to those of you that are premium members of Market Scholars via our Telegram Trade Alerts app. That gives those of you that are paying members of Market Scholars a leg up on those that are just free members watching it on YouTube. So gives you maybe another opportunity to review those trades and place them if you so desire. Obviously, we don't make direct recommendations, but that's always up to you. But some of you might decide to do that before the market is closed, as opposed to waiting until the next morning to try to get your trade filled. So anyway, the trade that I conducted here today was on DocuSign. And like a lot of those other companies that I rattled off earlier in the presentation, like your Chewies and your Pelotons and your Zoom videos, DocuSign is kind of known as a coronavirus play. It's a stock that has a tremendous performance over the last year. You can see these labels up at the top. This stock is up 255% in 1 year's time. So while we're just looking at 3 months here, the further back you go, you're going to see a really exceptional growth stock here. But this thing has caught my eye the last couple of days. As you can see, we've had a nice bounce up and off of that rising moving average after having kind of stabilized going sideways on the chart for quite some time. And now it's kind of giving the impression that it wants to make another move to the upside. Now, whether it goes all the way up here to 290, where it went that day when Zoom Video reported their earnings, whether it gets up there or not is anybody's guess. But it does look like the chances are greater at this moment in time, in my own mind, that that could happen than it would have been if I were looking at the stock over here. When it was trading below the moving average, it was kind of giving us the impression that, you know, we got to be a little bit more careful. You know, when a stock is up 255% in a year, it could give back 50% and not really even think twice about it. So you got to be a little bit more careful with these firecracker types of companies like we see here in this case. But obviously, it is still a market-beating company. The S&P 500 dotted line is down below here. Price action is above there, so it's a superior company from the stock market's perspective. You can also see that not only is the blue line giving us a bullish posture, which is what this blue background color is telling us on the market forecast, but we also have the green line rising. So it's at 39 and rising. Remember, as long as it's between 20 and 80 and rising, we consider that bullish. Now, in this particular case, it would be weakly bullish because it's not above 50 yet. But nonetheless, at least there's the trend traders that are maybe starting to become more enamored with this stock again after taking a bit of time off, because remember that green line actually went into the lower reversal zone there back in the middle of September, where it kind of seemed like the trend was ending. Now all of a sudden you're getting renewed hope as that green line is emerging out of that lower reversal zone again, that hey, maybe we've got yet another run in front of us here for DocuSign. So the trade that I ended up doing was a bull put spread. I used a weekly contract, not a monthly contract, and all of those trade details are waiting for those of you that are premium members in the Telegram app, as I mentioned before, including the strikes that I used, the fill prices, etc., etc. But you can see here on the chart that I did draw our break even on this. So I had sold the 215 strike and I received 75 cents for that as part of that sold bull put spread. And therefore our break even on this particular trade is 214.25, and we'll be in it just for a few weeks since I'm doing the weeklies, not the monthlies. And as long as it can stay above that rising moving average, that means that we have a fairly good chance to see profits on this particular trade. And if not, that's the whole point of selling the bull put spread as opposed to selling the naked put. When we're setting it up as a spread, part of that means that we have an embedded hedge within that spread itself. In this particular case, I'm pretty sure it was the 212.50 put that I purchased along with selling the 215, and therefore if it does break down in a major way and goes way below 212, then we're basically covered anything below that. We'll still lose money, but we just won't lose incremental amounts of money because we would be the owner of a put in that particular case. All right, so that's your trade application example. Basically a work from home coronavirus type of a play bouncing up and off of its rising 30-day moving average. So if you got value out of listening to this presentation tonight and you want another full-length video including a trade application example on Thursday, I encourage you to go out and click like for me there on Twitter. It'll be pinned to the top of my timeline. You can also do it while you're watching the video on our website in our little Twitter widget directly below the video. So with that, I want to wish you all the best of success with your trades and your investments. Goodbye for now.